Hello, ladies and gentlemen. Welcome back to another video. First things first, this is not financial advice. Anything I say in this video is strictly opinion content, and I am not a licensed financial advisor. With that understood out of the way, let's dive into a big time video for you today. My personal GME prediction and outlook for the next several weeks. And at the end of this video, we'll be going over some newly minted Roaring Kitty tin foils. So first things first, I wanted to shout you guys out. Thank you for liking the videos, for commenting. I love the discussion we have going on here. And subscribing too. Thank you guys for that. Much appreciated. So first things first, looking at GameStop, we haven't seen anything for a long time. And I think some people, let me know in the comment section, are starting to lose interest in this ticker. And I say that not to fearmonger, not to do, any of that. But if you just look at the volume of this thing too, you're going to notice a sharp decline since the second bond offering. There's just been hardly a single day of decent price action in this entire span from early June until the end of November where we are today. That's absolutely absurd. And you did see the institutional filings actually decline for the first time since 2024, which, at the end of the day, I know there's people that still firmly believe that institutions are strictly buying shares to lend them out. I vehemently disagree with that. Institutions, at the end of the day, whether they like the underlying or not, they want to make money, period. That's the name of the game. There are clearly a lot of them now flipping shares, buying in the low 20s, probably selling in the high 20s, early 30s. It's just what it is. And so you can see that institutional ownership has gone down just a slight degree for this most recent filing window. And this is not a cause for alarm. This is not a panic button. I really probably think I would attribute this to a healthy pullback. Granted, you have to take this under consideration that GameStop, people are more likely to buy this equity when it's down in the low 20s, when it's down here where it is now. And they sell it when it gets up to these points here. So that's just kind of the trajectory that it's been on. I am not concerned. I think that we're going to see good institutional buying in this window. But like I said, it does corroborate with the volume completely falling off a cliff, almost to the point where I have to wonder personally if we have been in a swap since that second bond offering, and just with that slight blip of price accumulation for some big orders and fails to deliver being cleaned up for earnings. It's always a good excuse when they run the stock for earnings, especially when GameStop is continuing to beat expectations in earnings per share and on revenues. So quarter three earnings, my personal prediction, I think we're going to see a nice pop up, and there is a gap. So, the perfect scenario here, and I'll just draw it for you guys, would be to see a, kind of upward assault here in early December to break through the Dorito of Doom. It's looking like we would only need to crack $25 or $26. Now, the model that someone on Super Stonk is continuing to update, and this I wanted to say too, is I am a little bit weary of this now. This person is posting kind of all this like kind of opinion messages. I'll show you guys in the beginning of this thing. That I do want to talk about one other GME kind of quote unquote influencer in the community that's been outed as a total fraud shill. We'll get to that in a minute too. But they removed the Babe Ruth graphics in here. They're calling out Richard Newton for changing his behavior on X, and that's partially true. I mean, Richard Newton has not remained the same, but he's really just posting memes, and he has gone through periods where he does that before. It doesn't mean that he's hacked and that he's not the same person. He's literally posting images. He posted an image of himself. So I highly doubt it's not him. I think if anyone has gone off the deep end, it's maybe this person that's updating this sheet here. Granted, I still think they're, I shout them out because they're doing a service to the community, but their model, which is now accounting for this being a swap season, so no more Babe Ruth graphics, they are saying a pop right around a $27 for earnings. I think that's about in line with what I'm predicting. Now, if there are fails, which there are across various ETFs, fails enough to get us through that line, could Ryan Cohen dilute into that? It's absolutely possible. And I don't say that in any sort of bearish light. I say that in terms of trying to be realistic that there is a gap fill closer to $30, but outside of the Dorito of Doom, it's just not very likely that we crack that. My personal prediction, I do see a run up to $26, $27, $28. Now, if we hit 1 billion in revenue for the quarter, I think that psychological number is going to really throw the algorithms that buy and sell the security into a frenzy, and we could see a significant pop. But of course, with reality and living present in day to day in GME land, I think we have to be realistic too. It might be closer to 980, 990 million. So I don't know if we'll see that 1 billion psychological level. So I would agree that the $26, $27 range seems pretty likely for earnings. Now, again, if there's any company news or Ryan Cohen finally offers something forward looking, which I, again, think there's a less than a percent chance of happening. So you're telling me there's a chance that could change that as well. But I would say that's probably a pretty safe number that I'm looking at. And in the event that they do not hit, and we talk about the bearish situation, again, I wouldn't expect much more downside here. I think, the same that we haven't seen much upside, I don't think there's much more downside to go here either. I think the forces that be have already shorted this thing into Earth's core. These swaps are clearly still going on and are in effect as well. I don't see a lot more downside from here. I mean, if we're talking my personal total rock bottom, I mean, maybe 17, 18, 19 bucks. I just can't see it going too much below this. Now, if you turn on extended hours, and I want to show you before we dive into the other interesting things here, if you turn on extended hours, it has gone down below. It has gone down below to 1958 right here. It's a deep, deep, deep low. And it's funny, Altimeter's bottom finder signal, it's just lighting up every single candle print pretty much that GameStop puts in. So if you have used Altimeter's signals before, which I have, I think that this is a relative point where we could base. And again, before you're, rushing in and calling at the bottom, I think that is a pretty likely scenario that I don't see much more downside. Now, it does look like it did break out of the Dorito of Doom on extended hours, but not on regular trading hours. So again, just something to be mindful of heading into what should be some more volatile price action ahead of earnings. So as I said, to be wary of Richard Newton's spreadsheet that's currently being updated. And I want to make clear, I really do appreciate the service of keeping that updated. I think it's a PSA time, public service announcement, that be very careful who you listen to in the stock community. We have, and this has been something that I've had a pet peeve on for a while, but this person named Han Akamatsuo, whatever his last name is, he's this AI generated profile that got some popularity within the GameStop community. I think Ryan Cohen actually retweeted this person or this bot's content at one point after earnings. They pretend to be from Japan with X's new feature that shares locations of the user. They are obviously not from Japan. They are based in Europe. They have bought and sold this account multiple times before. Someone sent me a DM informing me of all this back in April of this past year. I blocked them right away. All I'm saying is, and again, I don't want to, dunk on anybody or start unnecessary drama, but be extremely careful who you're listening to. And people like that pretend to be someone else or have this this fake AI identity. In today's time, that's extremely scary that people can do that. Anyway, enough said on that. Moving into something that I also noticed, GameStop surpassed 20,000 cards in its inventory. They added almost 13,000 in the last 13 days. So clearly Ryan Cohen is seeing success in this space with power packs, people recycling cards like crazy, flipping them, turning them over. So Ryan Cohen now in the company is investing in spending money to buy more card inventory. This is a very good sign that their beta of power packs is going extremely well and is probably contributing to some of the revenue figures that we're going to see in a couple weeks here for earnings. Now, another thing, there is a great post that I suggest everyone take the time to read through. In the interest of time today, we are not going to do that. This is extreme heavy financials. And again, I think people tune out. They shouldn't, but they do. And I'm not faulting anybody for that. It's just, it is what it is. From Green Candle, Vandal on Superstock, they go through an extremely detailed financial forecast for the company. At the end, and I'll give you the TLDR, essentially they're saying that even with diluted shares, they're considering the bond offerings there being fully priced in, and I believe the warrants as well being exercised. They are saying that their fair value calculation is between $35 a share and $43 a share. So what is the upside? And I think that's relatively conservative. I'll throw my opinion in the ring there. That represents a minimum of 72% upside. So you don't need to be extremely detailed and nuanced and up to speed in financial calculations to understand that this stock is at a relative bottom. You don't need to be a wizard in TA either to understand that this stock has been beaten into Earth's core and should, I call it lazy TA, should bounce soon. So that's very good. Now, kind of spearing into the tinfoil aspect of things, banks have been sitting on almost $400 billion of unrealized losses. When did it start? The beginning of 2021, as you can see from this graph on Superstock. Now, this post, I think, ties into my overarching sort of viewpoint that is a bit tinfoil, but that the financial system, the stock market, really does hinge on the back of this brick and mortar retailer that people have kind of written off in the last few months. And I think, that is a coordinated campaign with bad actors, one of whom I pointed out there earlier in the video, but you can just see the losses that they're sitting on. And this is going to be bailout territory if this continues. Look at what happened in 2008 on this graph. It's nothing compared to now, absolutely nothing. You can see they're just held to maturity securities there too, and available for sale. Nothing's moving. It's getting worse, arguably. So this is something, in addition to the Japanese carry trade, I'm going to keep harping on that the state of the overall broader stock market. And if you're just looking at macro, if we want to talk about the Fed cut too in a couple of weeks, we can talk about that. But if you're looking at these things, something about this is not healthy. And I go back to what I said about NVIDIA earnings. When the entire breadth of the market hinges on one company's earnings, it's not. And yes, they have revenue generation for other companies as well, and that makes perfect sense. But it's not an ideal situation for the market. Now, ultimate short, Michael Burry comes back. He teases this big announcement, November 24th or 25th, whatever, and it's him announcing a Substack. It's him announcing a paid newsletter for $400 a year. Okay, that's the state of the markets right now. It's an utter clown show. And Michael Burry, again, he deserves a lot of credit for The Big Short, seeing what other people weren't able to see, but he's been calling the top every day since then too. So this is not the grand unveil I was hoping for. I was hoping he'd actually long GME. I was hoping Burry would go back long GME like he did in 2019. And kind of kick off that run, and he advocated for a share recall and all those good things. Now he's a paid influencer on Substack. I mean, it's totally embarrassing. The Roaring Kitty tinfoil, and I just wanted to finish up my prediction here. And I'm not, I feel like I'm kind of shooting strays today. I'm not trying to do that, but Michael Burry just shut down his fund after mega losses. He showed some put positions on NVIDIA and Palantir. That's not even contrarian anymore. It's like those equities are so propped up, it's not even funny. So give me something good, Michael Burry. Give me a GME 13F, and then I'll be back in. Now, I'm not going to buy your Substack, but I'll be back in on your whole logic there. The tinfoil, so the Time Magazine meme, which Roaring Kitty posted. Let me open this for you guys so you can see it a little bit better. The Time Magazine meme with the 420 end date on the timestamp. I've said this once before, but I think it's worth repeating that something happening potentially after April 20 would be the best case scenario for whatever he was trying to signal. Now, could it have just been, hey, it's time to cover? Absolutely. But if you look at the Dorito of Doom on my TA, which again is a very lazy TA, this is a Reddit theory that I'm basically just running with. The Dorito of Doom intersects on April 20th of 2026. What happens after that? And GameStop to break out of that at that point, it would be such a long decay of time. It would only have to be around $23 or $24 a share. And that would be after their revenue and earnings figures from their quarter 4 report, which I would presume to be very, very strong numbers. So that would be an interesting little wrinkle there. Let me know about that theory in the comments below. I think it's so simple. It's kind of so stupid in a way that it could actually be what he was signaling. And Roaring Kitty, I mean, the things that he has seen in advance have been uncanny, right? His level of prediction, his level of accuracy has been so good. So maybe that's what that is. That's just my personal theory. And again, I think, his emoji timeline, the memes he was producing, it's also worth noting those could be all done and gone. And we could just be kind of misinterpreting that and looking for meaning where they don't exist because, holding on to these hype dates and making financial decisions off of them, which I do not do, is extremely dangerous. And I think that's why a lot of the people are frustrated from this price action from this point here at $36 all the way down to the dumps here at 19. People are, myself included, why didn't I just sell the bag here? And even if I would have bought back in off the bond offering, my cost basis would be $22, right? Around there. And I'd only be down 8%. But my cost basis is up here probably, right? When it's all said and done, I'm down 30%. And that's not a fun feeling, right? And then you start to question psychologically the company. That's why I always fall back on earnings reports. I always fall back on guidance and leadership. We don't really have guidance, but we have leadership. Ryan Cohen is investing in collectibles. He's doubling down, presumably, or tripling down in that space for increased revenue. And then they're sitting on a boatload of cash that collects interest at a 0.0% coupon. Extremely attractive situation going on here, kind of no matter what your cost basis is. So is that what Roaring Kitty was signaling? We'll have to obviously wait and see. The last thing I wanted to talk about, and I'll open this in a new tab for you guys as well, was the "I'll wait for you" Seymour dog from Futurama post. This one, I know a lot of people were speculating that it was involved with the ticker Unity software, which is a great stock, a great turnaround story as well. I'm not advocating for it, just saying that it's intriguing. And there was a lot of call flow coming in at this period too. It has continued up until I think the last month or so. I've seen it decline a little bit. Has he been playing options with this? Well, if he was talking about the U, which falls off from Panucci's Pizza in this clip, it falls onto the floor, and his Unity Rick James thing with the Unity ring, if he's signaling that he's playing Unity, which he might be, that could just be the precursor for GameStop. Finish the Unity run, take that money from the calls, dump it into GME calls whenever he thinks the time is right for the stock to run again, talking about GameStop here to be clear. Or simply, I will wait for you. Maybe they kicked the can. Maybe, they renewed a swap roll in January of last year, a huge one. And maybe he's just sitting, holding his shares, waiting. Let me know what you think of that down below. It's not the spiciest by any means, but it's just something that I come back to frequently because it's such a powerful clip. If you watch that actual episode of Futurama too, it's such a powerful, emotional kind of, not a tearjerker really, but just like a wow moment for that series. And this has kind of been a wow moment for the stock where the company's fundamentals and financials have improved and the price has depreciated significantly. So it's time to start having it make sense. That's where we're going to get the Q3 numbers. I'm very much excited. Let me know what you're forecasting below, what you think about the tinfoil. As always, everybody, thank you for paying attention. Thank you for watching the videos, and I will talk to everybody real soon.